Louisiana Citizens, which is the state's last resort insurer, is increasing its rates by more than 60%. Wow. This comes as multiple insurance companies pull out of Louisiana because of repeated blows from hurricanes.
Now, NBC Local 33's Anam Siddiqui explains how this could impact the housing market. Anam?
Mentor here with another real estate update. We're going to talk about the 14 states that are facing higher real estate insurance premiums. If you want to find out if your state is on the list, make sure you stick around because I'm going to reveal all 14 states for you. And we're going to talk about how you can reduce your premiums by taking some of these steps that we're going to talk about next. So first, let's talk about why premiums are increasing nationally, especially in these 14 states. But premiums will go up for a variety of reasons, but one being that the insurance company got it wrong. Their actuary team got it wrong. So here's what's behind the veil of an insurance company. Insurance companies are essentially out there charging premiums, collecting money, and insuring our risks, right? But how do they come up with that premium? A lot of people don't know what's behind that veil. What's behind it is an actuarial team. An actuary is essentially a super mathematician, is how you can think about them. They focus in on advanced calculations that predict or project the likelihood of something occurring. So for life insurance, they have life insurer actuaries, and they use data and all these statistics to see historically what percentage of people will die. If we put 100 men in a room age 55, how many of those men are going to make it to age 56 statistically? So the actuary will break down those statistics and then charge a premium across a pool of people who are insured to make sure that they can not only cover their risks and cover those bets, but make a little bit of profit, maybe a lot of profit at the end of the deal. So what happens when actuaries get it wrong is insurance companies lose on their bets. They made bad bets. And the only way to offset a bad bet is, one, to readjust your projection, readjust your numbers, readjust the statistics, because history, while it is a good predictor of the future, it doesn't always match the future perfectly. Things change, especially when we're dealing with weather. And for insurance premiums, when it comes to real estate, a lot of this is based upon weather. And we've been having big weather changes, global warming, global cooling, whatever you think is going on, it's happening right now, right? So you're seeing these different shifts, and more hurricanes are hitting different parts of the country at higher frequencies. When this happens, the actuarial data does not hold up, and the only way to offset those losses is to increase premiums. And that's what we're seeing is happening in these 14 states in particular, but it's happening, across the planet, right? All over the globe. Actuaries are getting it wrong and different things are happening. So what are the things that you can do to reduce your insurance premium?
Really fast, if you're enjoying the content, make sure you like and subscribe to this channel and click the link in the description to tap into my free real estate training that'll show you how to acquire properties for pennies on the dollar all across the country. You don't want to miss out on this free offer.
Well, one thing that you can do is accept a higher deductible. What is a deductible? A deductible is an amount of money that you pay first before the insurance company steps in and pays for whatever loss or damage was incurred. So you may have a deductible on your insurance policy of $500. So what that means is if you suffered a $20,000 loss, you would have to come up with the first $500. After that, the insurance company would step in and pay the remainder, the $19,500. So if you increase your deductible, what you're doing is taking on risk. You're self-insuring up to a certain point. And as you do that, your insurance premium will reduce. So if you want to have more cash flow coming out of this property and less money fixed in premiums going out the front door, you can accept a higher deductible and take on that risk. Now you have to have a good comfort feeling, one, with the fact that you don't think this issue, whether it be a natural disaster, some type of hurricane, whatever, you have to have a good gut feeling, I would assume, that this is not going to happen. But even more than that, that if it does happen, you have a cash position on the sideline that you can step in with to meet that deductible. But that is one way that you can reduce your insurance premium. The next thing you can do to reduce your insurance premium is you can start to reconfigure your property to make it safer in the event that one of these natural disasters does happen. So elevating your utilities above ground level, reconfiguring the property, adding in different irrigation systems to the property so that floods are less likely to occur. If you do this, you can actually get your property inspected and get a certain rating on your property. These are basically called flood mitigation measures. So you take these flood mitigation measures if you're dealing with like a flood insurance policy, and if you take those measures, get your property inspected and certified, that will reduce your premium with these different insurance companies because they know that you're a safer bet than the person that did not do this, right? So you get rewarded for that. So those are the top 2 ways that you can reduce your insurance premium. So make sure you look into those different strategies. That's outside of just shopping around and going with a carrier that is more affordable. And there are different varieties of reasons why one carrier may be more affordable than the other, most of which would have to do with their actuary data and their book of business. If they're looking to take on more business, if they're looking to just kind of stick with the book that they have, or if they're looking to diversify into different areas. Insurance companies have a variety of reasons why they will adjust premiums or increase them, reduce them. So just keep an eye out for these different things and shop around as best as you can to get the cheapest coverage for you. And last but not least, here are the 14 states where insurance premiums are increasing the most. We have Washington, Oregon, Nevada, California, New Mexico, Nebraska, Iowa, Missouri, Illinois, Arkansas, Mississippi, and North Carolina and Maine. So these are the areas. If you're in these states, you need to start to take measures to reduce your premium. And when we're talking about, how high are premiums projected to increase in states like Louisiana alone, the premiums are projected to increase upwards of like 63% going into 2023. So your premium could almost double in some of these states. It can be very shocking, very jarring, and it can eat into your cash flow. If your policy goes from $800 a year to $1,600 a year, that's going to start digging into your cash flow, along with some municipalities where, property taxes are increasing and these different fixed carrying costs are increasing along with interest rates. So now's the time to step back and think about how you can reduce your fixed carrying costs so that you can increase your cash flow. If you can keep these properties cash flowing through this recession, through this short-term spike in interest rates, you're going to be really rock solid long term. So hopefully this helps you guys. I wanted to get you this quick update so that you can stay ahead of the game. If you haven't tapped into my free real estate training that shows you how to acquire properties for pennies on the dollar all across the country, make sure you click the link in the description. That'll keep you tapped in. It's 100% free, so you have nothing to lose there. Brian Grimes, your real estate mentor, signing off.